Good afternoon, Maverick traders. It's Joe with you here. It is the 15th of August. It's a Tuesday. Let's get into the markets. I've got my 2 cents. I'm going to share with you what I have. Make sure you take responsibility for the outcome. You guys know the drill. I'm going to go ahead and cover some meaningful news of the day, see if there's anything out there that might have changed sentiment or added to it. We're also going to do a technical breakdown of the markets and kind of the overall motion of the ocean, and I'm also going to share a couple of trades that I found that might be opportunistic, bull, sideways, and bearish.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into market analysis, you guys can see that this slide actually continues. The Dow, the S&P, and the Q is down over 1% today, which is probably one of the stronger moves to the downside that we've seen as of late, since the downgrade a couple of weeks ago. The Russell's down 1.32%, oil and gold down as well. Oil was down about 1.72% when I built this class, and gold slid a little further from about 5.2 to 5.6, so it's just kind of flat. It's just kind of bouncing back and forth. So take a look at the daily news here. The markets continue to slide today on a stronger retail sales number. This kind of raised this eyebrow that I have when good news is bad news and bad news is good news. We've had a very resilient, strong market, very bullish and stubborn the majority of the year. And now we're to this point where we're starting to see a little hesitation, a little weakness, a little fatigue. I love what Rob and Darren were using the analogy of a boxer, still on his feet, but wobbling. And it's not a bad thing necessarily. It's just, hey, the markets have exceeded a level to where investors are actually comfortable, so you see some profit taking coming off the board. We're also in the middle of earnings season. So this retail sales number comes in hot, 0.7 versus 0.4. Not just a little bit, it almost doubled it. So is this the soft landing the Fed's hoping for, or is this their worst nightmare, meaning they did not get in front of it enough and inflation is still running rampant? We did get a very strong PPI number as well. It was hotter than expected. Not like this, not like the retail sales, but we also did get a CPI number that expanded. So we're seeing a little bit of an uptick. Now don't get me wrong, all these numbers have been going south, so maybe a little bit of an uptick is normal when it comes to a soft landing. I wouldn't know. I haven't seen too many of them personally, but we'll have to see how these markets take it. Let's continue over here to the advanced decline line. We got 78% declining, 18% advancing, 4% just kind of flat, and above below the 50-day moving average has flip-flopped over to the 61 percentile of stocks are below their 50-day moving average. So this is a general sell-off, and it has been since it started. Usually we see some sector attacked, some sectors will outperform. This is not the case. This is across the board. So let's jump into it. I've got the SPY chart here, and you can see that we are at this 50-day moving average. I always say that this is my true line in the sand personally. I always look for the 50-day. It still has a beautiful slope. The 20-day is actually sloping lower, so that's kind of a shorter-term weakness indicator, but the 50-day is still kind of on this 45-degree trajectory. We have talked about this over the last couple of days. This looked like a little bit of a head fake here when it came to Friday and Monday. Tuesday, quite a different story. Now, my line in the sand, personally, folks, and I'm just going to go ahead and share it with you, technically is this area here, and it's toying with it. Today, it did close below it. We'll see what happens tomorrow. Now, I don't want to jump to bear town. It's not this one. It's not an indication to where I'm going to just dump all of my bulls and go straight bearish. But it does take away the ability of my +2 or +3 to come back. All right, we've been +2, +3 this whole run. It's been above the 20-day moving average. This doesn't correct too far. But now that we've hit this tired area where we're starting to see the boxer's knees start to wobble, I'm going to par things backwards. I'm not going to be afraid to punish bad earnings. Or if I see profit taking go a little further than maybe I think it should, I'm not afraid to jump on that as well. So opportunistic when it comes to bullish moves, things that are holding into there, and as well as things that are overbought that are starting to show some weakness and sell. Now, it's a little bit too early to make that statement as of today for the rest of the month, but that is what's going through my mind. Let's get to the Qs. The Qs is very similar. The only one that's actually still above its 50-day moving average, which I don't have here, is the diamonds. The Qs is showing a little bit more bearishness than the S&P, and the reason being is if you take into the same consideration, let me draw that line straight. This elbow here, or excuse me, this platform, at the same time, right, June and beginning of July, it's already below it. It's actually below its 50-day and coming back to try to retest it. So this is a little bit glass half empty more than the SPY holding on, staying neutral. This is one that I would already be looking to scalp some of those high flyers. Now this is a slippery slope and a very dangerous place to be because we've watched stocks like Nvidia, which I'm going to give an example here as well, continue higher, and Apple hits its all-time highs and Microsoft joins the $100 billion company. We've seen the overextension. We know there's profits. We know there's money. And they will be the first to be registered or cashed, right? We're going to cash out of the higher flyers and put it into some of these lower things, right? That's what investors do. But they can bounce aggressively. So we got to make sure that the individual stock we're looking at is continuing to set lower highs and lower lows before we can comfortably get in there with a nice shorter term options trade and take advantage of it. So that's kind of where I'm sitting right now. Let me get the heat map and finish out here, and then I'll give you my outlook. It's a general sell-off across everything. So you see technology, communication services, consumer cyclical starting to drop, but then go over to energy, real estate. Industrials is also red, so it's not taking much to get these markets to stay red and continue lower. Sometimes I sit back and realize we don't need a reason to be going the direction we are. We were just due. And that's where I'm sitting. We've had some earnings that have been missed, some projections that have been a little bit weaker than expected. And we've seen in the past that these were rewarded. People just bought and bought and bought and bought. Well, here we are getting out of earnings season. We still have a whole bunch left, but we're on the tail end of it. So where does that put me? I've got to drop it down a notch. And I take a look at some seriously easy indicators. We were below the 20-day moving average. 20's sloping downwards. The 50's flattening. It's still up a little bit, but it's kind of flattening. But we're at it. So the SPY is at it, and the Qs I just showed you, folks, is actually below it. So I can't stay zero. I can't even stay zero. I've got to go -1 or even -2. I'm going -1. Now my monthly outlook, I'm taking a look at the whole motion of the ocean. This is just a deeper, bigger pullback. My +2, +3 outlook that I've had for the last little bit has now dashed down to a +1. It's not even a 0. I'm still calling this a hesitation. I do think it might pan out. It might stabilize. It just depends on where the markets take any sort of news moving forward. So here's my potential trades. A couple came over from last week. I still do like them. I don't want to abandon them. Keep that in mind. OKTA is one we'll show you here in a second, but it has earnings on the 27th along with the choice I had for bears. Now notice my bear list has gotten larger. A lot of it you guys have been watching. Chewy has been weak for a while. Kellogg's, General Mills, these companies have been getting smashed. SQ was one brought up on Friday's class. Spotify, ARKK, it's not up there, but it's one that we looked at earlier. I have the XLRE, the real estate, because I do see a little bit of weakness, especially if we are indeed going to slow down. Let's jump into the bull here. This is ABBV. This was from Friday's class. I do like it. It is showing some stability here. What I like the most probably about that is it's not really participating in that downturn that we saw today. It gapped, but it's just, look at this, 0.1%. That's awesome. For a stock that large, that's flat as you can get. But I love this pattern right here, this aggressive shoot up here, stabilizing above the 150, so sideways to up. I believe we were talking about a diagonal on Friday. I'm going to echo that as well. Some sort of maybe a targeted butterfly, 155, 150, 160. Not too aggressive to the bull side, but it is showing resilience and outperformance amongst not only its sector, but a whole bunch of other stocks out there. OKTA, this was on the sideways last week. I had this last week and I liked it. It was a larger range for you butterfly condor people, excuse me, I should say condor traders. 65.70, 75.80, maybe even a little wider than that. I still do like it. What kind of got me a little concerned is because I just checked that it does have its earnings. I believe they're on the 27th or the 30th of this month. So if you're sideways in it, you probably only have a few days before something maybe change that. That's what's so tough about volatility. It usually ends up going up or down. And then the last one I have, or I should say my example for the bear side, I do have a lot. Make sure you go through those ticker symbols, folks, just because I only show you a few. I do like them all. Is XLRE, the real estate sector itself. I just love what it's at. I love it. Not a lot of volume here. This is an ETF. A lot of times you don't get the massive spike in volume that you will because it is diluted, but it is tracking what I believe to be the correct sector when I see continued weakness moving forward. That's my opinion. That's why we love these classes. So general sell-off in the market, it's continuing. There's nothing really outside of what we've been watching for the last couple of weeks. That's what's kind of fun about this is, oh, geez, we're getting worse, we're getting bad. I know I just said, hey, we're over 1%. I didn't see a real solid 1% sell-off for a while. It's just been a lot of 0.75%, 0.5%, but they add up. So it's a general sell-off that's continuing. There's no panic in it yet. Profit taking for now, keep that in mind. Some disappointing earnings and projections moving forward. Usually these were met with not a lot of reaction and or buying in the first and second quarter of this year. This time, not so much. So let's see if that's going to continue. SPY and the Q struggling to stay above their 50-day moving average. The diamonds is comfortably there, but it still has that same pattern to the downside. Economic reports, hotter than expected retail sales. Is that a sign of a spike or a worry that inflation's still there? Or is this because they are a month behind? Or is this just the soft landing, the last ditch effort before the end of the summer? People turn their focus back to school, back to work. Spending will come down. We do have, and I'll just say this while we're here, a whole bunch, check out the earnings of retails. We got Target, we got Walmart, we got Ross. That's just the rest of this week. Past that, there's a whole bunch. We got Dick's, we got all sorts of different things like that. Estee Lauder. So if we see the reflection of the expectations moving forward that some of these companies are worried about a slowing consumer, that can really echo as we get deeper into the fall and actually into the end of the year. Not much left this week when it comes to economic reports. Housing numbers, jobless claims, Philly Fed, and leading indicators. When I say housing numbers, it's housing starts, building permits, things of that nature. The majority of those will come out tomorrow, so let's see if that slows down or we see any sort of reaction that the markets have. So that's it for the market roundup, folks, for Tuesday. Bye, everybody.